someone said to me like Trump getting in is bullish flat price because he supports the oil industry, but I just don't understand that point because he's all very pro-production, and I think he wants to see a correction, take credit for the correction, fill up the SPR. We want to take a lot of credit for unwinding the Biden administration policy on oil. So I cannot see the bullish argument for Trump being president, and I think if people are expecting this, then yeah, this is a bearish thing for markets. Hi everyone, welcome to another episode of World of Oil Derivatives. Now the market episode, I'm joined with Vincent, Martha and James. Once again, as always, please remember to like and subscribe. Okay, interesting stuff going on in the market right now, even despite the low volatility. Martha, are you going to start us off?
Yeah, sure. So all in all in Brent Futures this week, we've seen a weak week. We're down below $84 now after, I think, earlier this week or last week, within touching distance of 88. We've seen mass stop outs shown by OI dropping more than 200 million barrels in 2 weeks. So from the 2nd to the 12th in the September. So that's pretty significant. We've seen 3 weeks of both long and short prod merc players taking positions off in Brent Futures from the CFTC report, which we haven't seen in WTI, but we have kind of seen in gas oil for 2 weeks. So that's quite interesting. Net positioning in the CFTC report for money managers increased for the 5th week, but there was an increase in short positions, which is the first increase in 4 weeks. So that's like looking at the CFTC report. And then more like fundamentally, we've seen the news with Iraq this week, which has been quite significant. We've seen them exceed their OPEC plus quota, and they've promised to compensate for overproduction, promising beg for forgiveness, not for permission. They've promised to cut production by 4.22 million barrels a day, but this is, hard to do, and it's to do with also a conflict with this regional government and in Kurdistan to do with the export port. So it's will be interesting to see how much control they have over that export, amount that they have. And then apart from that, we've seen really bearish economic data from China, especially. And then the Chinese independent refineries have slashed their processing rates. Oil imports fell by 11%, and 1.5 million barrels a day of oil went into storage, even with the weak imports in China. So none of those stats are really very good. We can see China stockpiling this crude, as we saw earlier this year, in like iron ore, steel, gold, which is, not a good sign for their economy, that they're not really using these things. Underwhelming growth, potentially.
Great summary. I mean, there's a lot. It's weird. It's like there's not that much going on, but there's a lot going on under the surface. I think macro as well, which James will touch on. But yeah, I think the one for me that's been really interesting is, the Iraq, Kazakhstan and Russia, they have to submit compensation plans for exceeding their quotas. That hasn't made huge news, but it's, I knew about the Russia one, okay, effectively, we're sorry, as he's saying, Iraq, like, asked for forgiveness, means things are brewing behind doors, right? And again, if you're looking at the market and they would have wanted a rally, a summer rally. We're in the midst of summer. No one can say we're not now. We've been talking about it all year. We're here now. We're trading at least August barrels, coming up to September barrels for Brent expiry very soon. This is actually, if anything, the end of summer, and we haven't had that big rally in Brent. So I think this is where people are getting nervous on the producer side or the OPEC side. And so you can imagine it's like, if they look at things very fundamentally, they're telling you, we could have had a rally here and you've been overproducing essentially. So submit compensation plans. Do you know what that means? I mean, what are you getting from, this is the OPEC plus joint
Ministerial. So I think
Ministerial.
they just need to be approved by OPEC's compliance committee. It's like their plans to reduce the exports, and I guess some kind of agreement with the Kurdistan regional government as well to sort out the exports. I'm not sure exactly what they need to prove, because obviously it's all future planning, so I don't know really how you can get approval on that, but it sounds like they're being pretty stringent. But I mean, definitely, I think we might see some frayed relationships within OPEC and OPEC plus because of this lack of summer rally. And I think that, when countries are low on their income from oil, that's when they can, start to get at each other within OPEC.
So we were spitballing numbers about this kind of revenue conversation. I think 9 million barrels a day Saudi producing right now. If they increase back to 10.6, which is kind of like the most that they've produced, but then of course that would likely lead to a price decline. I think $83 per barrel is around 750 million a day, and like $45 is like, I don't know, 450, 500, I think it was. So clearly, like, it's just a very binary revenue decision for them. You know, if we're going to overproduce, are we going to get the revenue back with lower oil? And the answer is like pretty clearly, obviously not, considering where their budgets are and all that, and considering the economic situation for kind of everyone. So they're going to just keep fighting like they have been doing for the last 4 years. Okay, we kind of know that. But it's just, when you see these signals about, like, you know, first of all, it's signaling to the public the IEA are wrong. They so badly need the demand to follow through, because no one believes the S&D story is going to be in balance without demand kind of saving the day. So they're fighting very hard on that front. Also getting annoyed at Russia publicly, but now Iraq and Kazakhstan for overproducing. There's like discussions, you know, tense, like you say, but then there's like out and out data that you can't deny. And I remember start of my career, Iraq was talking about, I think it was about 2 million barrels per day at the time, and they said, we want to get our production to 4 million barrels a day, and it was like a big aspiration for them. 4.22 now. Like, it's not like they haven't just been on this endless run to just produce as much as they can, because like Trump says, like liquid gold, that's how they view it, right? And how a lot of economies view it. So I just think, it's not like I'm saying anything new. It just, when you hear these things, you just think, it's not about will they cut, will they extend cuts? It's like, does anyone care, and can anyone keep a lid on this? Is it going to be propped up? Then you have all the macro stuff. It's so hard not to talk yourself into a bearish story right now. So I almost feel like we need to talk like the opposite. Kind of what's bullish? Go on.
Just on what you were saying about supply and demand balances and the IEA, we just looking to Guyana as well. Our head of research shared some stats from Guyana that it's exceeding expectations, the amount of oil that they're planning to load through the year.
Yeah.
So in September, they're planned to put 21 million barrels in crude loading, and the daily volume will exceed a new record. So the ramp of production and loadings in Guyana is proving like far better than expected. So I think this also is putting pressure on OPEC and OPEC Plus, that there are these, you know, far more developed avenues of oil production that, you know, just that have been developing so quickly, especially this year. And like there was an Iraqi field, was it yesterday, that was discovered? Like really significant amounts of oil. Just
it's like the sentiment of extra supply is there as well. No one believes that there's not going to be more supply. And I always think it's like refinery margins, right? There's not like a degree of profitability. It's you're profitable or you're not. And if you're profitable, you're going to try and make as much as you can. You're going to run at maximum. And it's the same with oil production. If you're above your break even, you're going to pump as much as you can to make money. And with mid-80 Brent flat price, like the rough benchmark for everyone's oil production, at the end of the day, everyone who can drill oil for lower than 83, and realistically, even the highest is going to be like 75 roughly. Everyone's making money, so new producers are like just doing everything they can to produce. And we've had a big retracement away from the renewable kind of talk of clamping down on production licenses, things like that. So there doesn't seem to be as much pressure. Go on.
And I think all of those mergers we've seen recently of the majors, they're able to do these discoveries and these explorations because they have so much larger revenue and capital to put into it.
And wear price volatility, because they can like wear down moves and just keep the production stable. So on that note, we need to find some bullish things. But you have said, like, at the end of the day, there's a draws going on in the US. That's still happening. We are getting, I know we've talked about gasoline retail sales being weak, but we are getting draws like we should be in summer. There was a hurricane that had like a bit of at least a temporary bullish impetus. Anything else?
I think nonetheless the bullish thing would be a strong physical market in North Sea data Brent.
Yeah.
The DFL's above $1. The Brent spreads backwardation is still quite strong as well, holding up above at 80 to 90 cents per barrel. So, which is indicating that at least the physical market is seeing strong demand. Perhaps that's been done by a few trade houses, but nonetheless, backwardation is strong, indicating expectations of like crude inventories to be drawn, stronger demand. So the question is, will that be sustained into next month, into September?
No, it's a great point actually, because that's the inflection point. If it's strong enough to maintain a high backwardation, then the market is by definition strong. If it's not, then these strongly backwardated numbers, people are going to be rushing to bring on supply from their storage because the prompt's obviously the strongest, and you're under pressure from like everyone competing for what oil is there they want to sell. And if there's enough demand to follow through, then it doesn't matter. But realistically, You know, I even saw some numbers this morning. Basra Light, you know, very key like grade for kind of benchmarking production, like refinery usage around the Mediterranean, and a lot of refinery production, the margins are negative. And again, it depends what calculation you use, of course, but I think it's like, you know, decently negative on a net back basis, i.e. once you include getting the actual oil there, not just the outright profit from yielding the barrel. So if that's the case, and Singapore margins are also looking weak on that basis as well. So it looks more like, if we rewind again 2 months prior, we were very much seeing the market weaken, and actually the biggest indicator was North Sea being weak. And then all of a sudden we had a strong expiry out of nowhere, and it's kind of bounced back. But if margins are negative and there's a lot of pressure generally in the macro world, it could be propped up. And that's the point, because like in 2014, for example, and there's loads of examples, 2018 as well, lots of people were very, very long that year. But ultimately, structure, i.e. North Sea oil and the kind of pricing around that, it can be propped up for quite a long period against the fundamentals. And then once that gives way and there's nothing there to support it, it gives way aggressively. So if anything, like, how would you call this, like Brody in trading? It's like, it's almost, you know, volatility going down and prices being propped up. You can perceive that as, oh, not a lot's going on, but it can also be like almost like an elastic band. You've stretched it as far as it can go, and it's starting to slow down. The rate of expansion is slowing down, and eventually it snaps back.
You can see where the key risk levels are when stops get triggered, and then all of a sudden volatility suddenly spikes, and the market moves in one direction.
Yeah, but when a market's overextended and there's nothing really holding it up, and you've exhausted that buying flow to hold it up, when it gives way aggressively. And I think we have to say that could be happening in the North Sea. It's not like we're like, wow, man, this market is just so strong. It was strong in spite of the evidence. Okay, macro then, James.
Yeah, again, more weaker data, not much in the US, but really the big data was from China. GDP came in at 4.7% year on year, below estimates of 5.1. Retail sales, again, way below estimates at 2%, expected 3.3%. CPI in China is just 0.2% year on year, so they're on the cusp of deflation. And house prices fell 4.5%, the most in 9 years, and 12 consecutive decreases. So China's looking very bleak. In the US, the key piece of data was CPI. That came in lower than expected, and the market suddenly priced aggressively, much more aggressively, rate cuts. So the 2-year yield's fallen 25 basis points in a week, and the market's pricing 100% expectations they cut 25 in September, and is starting to look at the chance they may cut 50 basis points.
Is it fair to say, again, looking for more of a bullish narrative, there is a lot of slack in the system, in the sense of like interest rates can be lowered quite aggressively from where they are right now, and if inflation is low, then they're actually not in the position they were a few months ago when we were saying inflation's high and they already raised. But now we can actually see some support from the Fed.
Yeah, I think one problem with that though is there's economists sort of argue whether it's 6 or 9 month lag, but from when they cut rates, there's a lag of 6 to 9 months before it has an impact on the economy. And Jeremy Powell, the head of the Federal Reserve, has said clearly rates are tight. And if they cut in September, well, that's not going to impact the economy until halfway through next year.
But so when you say the economy, I guess you're looking for employment stats, PMI, and these kind of things, these underlying kind of statistics. But looking at markets, sentiment would be improved from a cut, right? We would have an equity rally, or at least...
Actually, the opposite. Equities normally rally...
Sorry, I know what you're going to say.
Yep.
But as in...
perception that stimulus is coming.
That stimulus is coming, and for oil, managed money, people tend to buy on Fed cuts. I mean, just purely from a sentiment basis. That is fair, right? But then you're going to say that actually cuts are kind of bearish in the long run.
Actually, yeah, cuts are bearish in the long run. Yeah. Equities normally fall on average 23.5%.
And you don't think that AI stocks can power us through? Just hold up the equity market?
Really interesting point on that, actually. Straight after the CPI number, firstly, the MOF, Ministry of Finance in Japan, intervened. And then you saw a big unwind of the hedge funds' big long short trades. So first half of this year, hedge funds have been long NASDAQ, short Russell 2000. And positions got bigger and bigger. And likewise, they've been long dollar yen, and it's at record levels. And both trades had a massive unwind. So the NASDAQ Russell unwound 5.6% on that day. And the Russell 2000
so this is more this mid-cap rallying rather than Nasdaq weakness, right?
On the day, Russell Nasdaq was down 2.2%,
Okay.
and the Russell was up. And the Russell's now rallied 12.5, just over 12% in a week. But the thing is, when hedge funds have losses, they tend to unwind other positions. Dollar yen's now down about 5 big figures since the intervention. And so what you tend to see is when they have these big losses, of course, there's potentially further room to run. And again, the Nvidia has kind of run out of steam. But they tend to unwind other positions. And I don't know, speculative for positions, are they still long in oil?
Yeah, that's what you're saying, right? So they've been flipping-flopping a lot this year, but they're back long, right, Martha?
Yeah.
So you might just see a general unwind of risk, hedge funds, speculative risk across the board. That's what tends to happen when you get big losses.
Yeah, we've seen the 5 weeks of essentially a really large increase in net positioning, then getting smaller each week. This week in managed money, it was about 2.7% increase, which is less significant than the other weeks, but an increase is an increase.
No, fair enough. Okay.
One other final point on that is we've seen a big rally again in gold. So yesterday gold surged, it's now at new all-time highs. So money's moving. You know, whether is that because the Fed's going to be cutting rates, or is that more of moving out of other assets?
I know you did a big Macro Mondays on the Trump assassination attempt, and the impact on the market. There's a lot, obviously, it's the biggest news in the world, but it didn't have a huge impact on markets. But people are, consensus, you were saying, the polls, Trump seems very likely to be president, at least that's the market.
Nearly 7% chance. Yeah, the market's giving it pretty much a done deal, I think, now.
So drill, baby, drill. He's actually come out, he's already said that in the last couple of weeks. And Guyana, non-OPEC production, and where we are in flat price, oil production should flow. And I think people do acknowledge, someone said to me that Trump getting in is bullish flat price because he supports the oil industry, but I just don't understand that point, because he's all very pro-production, and I think he wants to see a correction, take credit for the correction, fill up the SPR. I think he's big on that. They've got like a clear statement in the use of the SPR that you should be trying to monetize it, right? You shouldn't just be buying high, selling low. So they've been waiting for that dip. Last time when oil was like flirting with negativity, he's like filled it all the way up then. So he'll want to do that again, right? He'll want to take a lot of credit for unwinding the Biden administration policy on oil. So I cannot see the bullish argument for Trump being president. And I think if people are expecting this, then yeah, this is a bearish thing for markets. So anything else we can say on the Trump impact on oil?
Yeah, he'll definitely want to be bearish and also take credit for lowering gasoline prices as well.
Yeah,
domestic ones. Recall that back in his between 2016 and 2020, he often he was at odds with OPEC when OPEC wanted to cut or raise prices. Then Trump was the opposing factor, saying, okay, OPEC should be actually producing more. Essentially, lower oil prices are a tax cut to American consumers.
But then he doesn't want it too low either, because he wants to support the oil industry.
Of course.
And he did tweet the other way as well, like you need to cut and ease it. So there's obviously a level. Probably what his target is, a bit like OPEC's target seems to be between 80 and 90. Trump's target's probably between 50 and 60, or maybe higher actually, maybe like 60 and 65, that kind of range. So let's see, but that's going to be back in them.
He'll also be quite stimulative on the economy. He'll try and put pressure on the central bank to cut more aggressively.
But isn't it perfect if you target oil in particular, you get a big sell-off in oil, that will feed into inflation numbers. You will be able to cut on just that basis. You need other things as well.
And if the economy is already slowing, he'll want to see it.
Actually, you kind of want to emphasize the US economy weak now.
And people say he'll add fiscal stimulus, but I mean, can you add more than Biden's already doing?
Yeah, and I just think for people to be bullish oil right now, they need an impetus, right? And if it's just not really there. But okay, that aside, actually, before refining margins, what's the Googling oil segment? Is that you, Vincent? Are you going to do that?
Yeah. Sure.
So what's going on?
Yeah, a few things. So first headline, we've got Labour considers ban on new North Sea licenses and pipelines. So, of course, we have the Labour Party winning the UK election, and part of their goal is to renew commitments on climate change. And part of that means, from the manifesto, is talking about no new drilling in the North Sea, no new oil and gas drilling in the North Sea. So there's a headline actually slightly controversial initially. So you had a Telegraph article about Ed Miliband ordering immediate ban on new drilling, whilst Department of Energy Security Net Zero denied this Telegraph headline. It did not deny that this was the eventual intention, in the sense is that the Labour government is expected to ban new North Sea drilling licenses from oil companies whose applications are already being processed from the licensing round from 2022. However, this risks clashing between the new government and trade unions who are concerned about the job losses, but also about the fact that the oil companies have already spent money and resources on existing applications, and to unwind that would be a big change. So ultimately means that Labour is keen to send a message to about its commitment to tackling climate change.
Yeah, and I think that's the only reason why this will be relevant, because the UK North Sea production is just minnow, right? I mean, even in the North Sea, Norway have way more. And ironically, given Scandinavian type mentality seems to be very pro renewables, anti oil, like that's where they make all their money, right? And they have never halted production at all. They are pumping like mad, and then they'll find new licenses, they'll pump like mad again. So I think it's almost insignificant what the UK do. However, they have an influential political system and media, right? So at the end of the day, if they're signaling this is not good and we're going to put our money where our mouth is, does that infiltrate to the rest of the North Sea kind of producing countries like Norway? But I just don't think it's very likely at all. I'm just trying to find something that could be meaningful here.
I think it's more on the messaging and sense.
But that's what I'm saying. Why would anyone care? Like what Labour do, what UK government do?
Yeah, I think in the oil market not so much, but
No, I meant even general, because the real impact would be, okay, Norway go, oh yeah, you're right, let's stop producing more North Sea oil. It's like, well, they've got $1.7 trillion fund that's based on oil revenue. They're not going to slow that down. So they'd be nicely, yeah, we're renewable, but we'll make $1 trillion off it. Do you know what I mean? That's kind of been their mantra, and I don't think if they've not stopped that now, why would they stop it just because Labour in power? Do you know what I mean?
Yeah, I think they do want to kind of balance this, as in for the existing drilling taking place, they want to manage that to the end of the life cycles.
This is Labour.
Yes.
So that's actually, if anything, more production.
Sure. Yeah.
Relative to what people were expecting, if that makes sense. Anyway, the point I'm trying to get at is, if a convincing narrative can take hold, then there's enough pressure to have meaningful impact somewhere. And I think that trend's gone, is kind of what I'm saying. Do you know what I mean?
Yep.
Okay. Still interesting though. What else?
The other one, Japan to boost jet fuel production and imports amid tourism boom. So there has been a recent jet fuel shortage within Japan itself, which has been affecting commercial flights. This has come in line with summer tourism, as has bounced back since COVID times. Also supported by the yen's depreciation to a 38-year low, so which means that for tourists it's much cheaper for them to go to Japan and spend the money. So there has been some proposals about increasing the number of tanks at refineries and airports, as well as updating aging cargo handling equipment. This has been in the context of a structural decline with refinery production, as they've been reducing capacity to reflect falling domestic demand in Japan due to the Asian population. And
you found the one bullish thing in the oil markets.
Hey, we did it.
I mean, jet fuel has been the bright light. As in the hope was gasoline, but really it's jet fuel, right? I mean, it's not a big enough part of the barrel, but I think it was surprising in China, the airline kind of usage, demand, traffic, and yeah, it looks to be the same. And I think it looks the same everywhere, right? The airline travel has been very good this year, despite all the Boeing events.
Negativity, yeah.
Was there anything else on this point, or?
No, it's just that, yeah, although the article was specifically focused on Japan, we can see that there's been, like you said, like a wider trend around the world.
Yeah.
Travel demands returning.
Okay.
I think it's worth mentioning that like a lot of the Western airlines, because of like sanctions on Russia, they don't fly over Russian airspace anymore, flying either through the Arctic or through Central Asia. So that's like longer flight routes, 1 or 2 hours added each way. So that adds up.
Yeah, fair enough. Refinery margins. This is the one, yeah, it's tricky for me because, as I say, if we were looking at our benchmark margins, which, they have to be generic to be benchmarked for the global. Vincent, what's the margin chat?
Yeah, margin chat, negative, not much bullish news here. Week on week, it's been declining. Despite weaker crude, weaker product markets have outweighed this, including weakness in gasoline and diesel. So especially European gasoline, EBOB continues its downtrend. Cracks spreads have weakened. There was a lot of weakness on Monday and Tuesday. You had DR rallied, short covering flows from buying from trade houses and refiners. Gasnap selling, pressure down the curve. It seems to be lack of unwinding of length since the hurricane use, lack of demand. It really feels as if the bullish summer story for gasoline is over at this point for Europe. And similarly for gas oil cracks, it's been on a downtrend too. Cracks coming off, spreads back into contango, probably supported by this bearish macroeconomic data and sentiment as well.
Yeah, that is damning. I mean, heating oil as well, right? Heating oil, gas oil, diesel in contango. It's a structural message. It's linked to the physicals you can really get, and that's damning. So again, back to your point about North Sea being strong. Clearly, the main part of the barrel can't keep up.
Yeah, it's another maybe one bullish thing will be in the arbitrages between the different different regions. So the Brent Dubai has rallied last week.
So that would be supportive for Dubai-based crudes.
Dubai for now, because last week went from -10 to +40 within 2 days. That's
minus 10 cents.
Minus 10 cents.
This is a tiny range, right?
But you have like pockets of demand, pockets of times where traders are trying to arbitrage this.
Any trade idea this week or?
Yeah, I mean, just going off what you said about heating oil and middle distillates, I think that we're in such a heavy contango in the heating oil spreads that it seems like a good risk reward trade to buy that. I don't think it's going to break to be positive, but I think we're seeing levels now that you might prompt some carry trades and if there were a hurricane coming, we could maybe see how heating oil would be trapped in the States and demand's low, but there's none predicted in the next 7 days. And we're seeing really strong harvesting in corn and wheat. So if that continues, might we see a little more demand there as well. It just seems like a very low price might be good.
Yeah, good risk reward trade. I mean, that is trading at the end of the day. I see your point. I think historically that's...
And very negative managed by money positioning in the CFTC. So it could prompt a squeeze if there's a little bit of bullish news.
Yeah, fair enough. Okay. Go on, James.
Quick point I would bring up is you say we're looking for bullish news, but if we see the fundamental news here, conclusively we see it as bearish and the price action's going down, isn't that the perfect trade?
No, of course. You've got to keep testing it until...
Especially if we see speculative money's long as well.
Yeah.
Then it becomes a pain trade for them as it goes down, so they're forced to turn.
Yeah, I'm just trying to be balanced, but I get you. It's... I don't think, if we are expressing our view, that's great. But I think at the end of the day, this is the whole point of discussion, debate, is to test these theories, right?
Why are the speculators buying? What are they seeing that we're not potentially?
Yeah, but then again, I can see the logic. I can see the logic on if it's all CTAs, right? We had that. We talked about this, and that's actually CTA positioning. How much has that changed much in the past week?
No, it's around flat, I think.
Oh, it's around flat.
But it's on a downtrend, yeah.
Yeah, it's going down. I think it's.
So to be fair to James, where is that discretionary long position coming from? Then why would they be bullish?
I think.
And if the CTAs, if it continues down, the trend continues a bit further, and the CTAs start to go short, then it squeezes the speculators even more.
I think, James, what you're new to is the oil market is stubbornly bullish forever.
Yeah, exactly.
People talked about riding down, $100 oil down to 40. They'll keep trying to buy dips all the way down. It's just the state of the oil market. So if that's the case, you have to almost naturally have the steady bullish low volatility rally followed by a high volatility crash. And you need to be in it to win it. So don't get me wrong. That's the view from me at least. But it's just you have to debate these things. I think for listeners out there, I'm really curious too, because what I think they'll retort back, people who are bullish, are, look, we believe in S&D balances as the leading indicator of what drives oil prices, and our balances say there's going to be deficits, and based on OPEC's sustained cuts, based on demand increases, and we're back to that story. So I think you pick up the leading research, the energy aspects, maybe Kepler to some extent. If you're going to listen to banks, they're all looking at bullish balances. They might not be super, super bullish, but they're saying their balances will lead to a deficit. So that's ultimately what they're going to say. Everything else is noise. We would probably reverse that and say, look, it's all about price action, it's all about flows, positioning, it's all about sentiment. And then maybe, structurally, you're going to have some pressure either way at the physical when it actually comes to pricing. But yeah, it's the market can stay irrational, but then it won't believe it's irrational. It believes it's buying on a legitimate basis. So unless you convince the majority of the oil market, and the hedge funds are the ones who rely on these reports and rely on this consensus reporting because they don't have the physical assets, then there's probably justification in their eyes to continue buying. And we can't just be like, it's so obvious. If it's so obvious, that we'd all be billionaires and I wouldn't have even started Onyx, right? Just have a personal account. So, okay, cool. Last week we asked people on a poll, what is the best summer demand trade right now? Yeah, this was quite interesting because most people said buy Brent futures outright, which I think for me at least that's surprising. I don't know about you guys. We had buy US gasoline crack, RBOB there. We had buy the jet crack, buy the R. But ultimately, summer demand has to be from a product ultimately. And I'm surprised that most people just believed it was Brent futures. And maybe that's your answer. Why would discretionary be buying? Because they believe Brent futures to be the best expression of an increase in summer demand, which was the expectation all of this year. So maybe that's what you're getting at. And to your point about risk off, like you were saying earlier, once we get to the kind of monetization point in the next month or maybe even the next couple of weeks, given we're such mid-summer, end of summer trading barrels, Q4 is probably the time where you unravel and say, look, that was what I was expecting. I've got to take off my position now. And that de-risk move could be a huge impetus. Yeah, cool. So unless there's anything else to say, we will leave it there. Thanks again for tuning in, everyone. And appreciate your support as always. And see you soon.